The dollar that you earned in 2020 just 6 years ago is worth about 81 cents today. Not because you did anything wrong, but because the system is designed to dilute your purchasing power every single year. That's not a conspiracy. That's monetary policy working exactly as intended. So the question isn't whether your cash is losing value. The question is, what are you doing about it? By the end of this video, you'll understand exactly why I trade options, not to gamble, not to get rich quick, but as a deliberate strategy to earn dollars faster than they're being diluted, and where those dollars go once I earn them. In my last video, I broke down how the global dollar system actually works, the plumbing underneath everything. If you haven't seen that one, I'll link it. But here's the short version. The system runs on settlement, credit, and balance sheets. And today, I'm going to show you how I use that knowledge to build a personal income loop that most people don't even know exists. Now, I already know what some of you are thinking. Options trading? It's gambling. That's what blows up accounts. That's Wall Street bet stuff. And honestly, for most people who trade options, you're right. They're speculating. They're buying lottery tickets hoping a stock moons by Friday. That is not what I do. What I do is closer to what an insurance company does. I collect premiums for taking on defined, controlled risk. And if that sounds familiar, it's because we talked about insurance in the last video for a very different reason. Stick with me, because this connects in a way you're not expecting. Quick note, this video is for educational purposes only. I'm not a financial advisor in this context, and nothing here is investment advice. Options involve risk, and they're not appropriate for everybody. Always do your own research and consult a qualified professional. So with that out of the way, here's what nobody in the options world talks about. It doesn't matter how good your trades are if you don't have a system for where those dollars go after you earn them. Most traders make money and then let it sit in a brokerage account getting diluted. Or they roll it right into the next trade. Or they spend it. The families who actually build wealth from trading do something completely different, and it ties back directly to the monetary plumbing we talked about last time. The biggest thing I hear from guys who are skeptical about trading is, I'd rather just save my money and not risk it. And honestly, I understand that instinct. I was there not that long ago, especially if you've got a family depending on you. But here's what your savings account won't tell you. Holding cash is a position. And right now, it's a losing one. Inflation isn't a bug in the system, it's a feature. So go back to what we talked about in the plumbing video. The dollar system is credit-based. It requires expansion to function. And that means every dollar you hold is designed to lose purchasing power over time. So let me make this concrete. If you're earning $150,000 a year and inflation is running at 3 to 4%, which is conservative based on real costs, not just CPI, you're going to need to generate an additional $4,500 to $6,000 per year just to stay even. Not to get ahead, just to not fall behind. That's $375 to $500 a month in purchasing power that just quietly disappears to inflation every year, compounding against you. When someone tells me I don't want to take risks, I hear them. But the risk of doing nothing is already costing them thousands of dollars a year. The only question is whether they're going to be intentional about how they respond to that reality. All right, so if I'm not buying lottery tickets on meme stocks, what am I actually doing? Let me break this down as simply as I can. Most people think of options trading as betting on direction. I think this stock goes up, so I buy a call. That's speculation. What I do is closer to the opposite. I primarily sell options. That means I'm collecting premium income from other people's speculation. Here's the simplest way to think about it. An option is a contract. Someone pays you money today for the right to buy or sell a stock at a certain price by a certain date. And if that date comes and the stock hasn't moved the way they hoped, you keep the money. You keep the money no matter what. The contract expires. Done. That money they paid you, that's called premium. And it has two main components: time value and volatility. Time value decays every single day. It's called theta decay. And volatility, that fear and uncertainty baked into prices, that also generates premium. So when I sell options, I'm essentially harvesting time and volatility and converting them into spendable dollars. I trade options for one reason: to earn dollars faster than they're being diluted. Think about how insurance works. And I know something about that given what I do for a living on the IBC side. An insurance company collects premium from thousands of people. Most of those policies never pay out a catastrophic claim. The company profits from the probability that most contracts expire without a major event. When I sell options, I'm doing the same thing just on a smaller scale. I'm collecting premium, managing my risk, and profiting from the statistical likelihood that most contracts expire worthless. It's not glamorous, it's not exciting, but it works. Now, does every trade go as planned? No. You adjust when it doesn't. You size positions conservatively. You don't bet the farm on any single trade. This isn't about being right every time. It's about running a process where the math favors you and the framework keeps you profitable. Okay, so here's where most option traders completely fall apart. And it has nothing to do with their trading strategy. It has to do with what happens after they make money. Most traders treat their brokerage account like a checking account. Dollars come in, dollars go out. There's no system, no infrastructure for what those dollars are supposed to do next. In my last video, I explained that the global dollar system runs on plumbing, repo markets, collateral chains, balance sheet capacity. The whole system is just one big loop. Dollars don't sit still, they cycle. So why would I let my dollars sit still? Options trading isn't my strategy. It's my income engine. It's my growth engine. The strategy is what happens next. And here's how the loop works in my family. Step one, I earn dollars. It's from my airline income, from Remnant finance, and from options premium. Step two, those dollars flow into my whole life insurance policies premium payments. The cash value grows every year, guaranteed, tax advantaged, and completely in my control. Step three, when I see an opportunity, could be an investment like real estate, a business expense, paying for a vehicle, I take a policy loan against that cash value. My money stays in the policy compounding. The loan gives me liquidity without selling anything or triggering a taxable event. Step four, I deploy that capital. Step five, as the returns come back, I pay back the loan and recycle the dollars back into the system. And that's the loop, just keeps on churning. Earn, warehouse, access, deploy, recycle. Notice what just happened. I described at a personal level the exact same mechanics the global dollar system uses: credit creation, collateral, liquidity, recycling. Infinite banking doesn't fight the system. Options trading doesn't fight the system. Together, they copy the system at a scale I can control for my family. I'm not betting against the dollar. I'm using it more efficiently than inflation expects me to. Now, the guy watching this who's maxing out his 401k every year is probably thinking, why would I do all this when I can just set it and forget it? And here's my honest answer. If you're happy with that pool of money you can't touch until you're 59 and a half, that you'll pay full income tax on when you withdraw, that drops 30 to 40% in a crash right when you might need it, then just keep doing what you're doing. But if the reason you're watching this video is because something in your gut says there has to be a better way, this is a better way. Not because it's easier, it's not. It takes intention, it takes discipline, it takes patience, but it gives you something a 401k never will: control, liquidity, and certainty. Your 401k gives you a tax deduction today in exchange for zero control for maybe 25 years. My system gives me a functioning balance sheet today when I can access, deploy, and recycle on my own timeline, not the government's. The system rewards velocity, not hoarding. And a 401k is by design a hoarding vehicle. So if you're starting to see how these pieces fit together, monetary plumbing, options income, could be rental income, infinite banking, and you want to keep going deeper, subscribe to this channel. Every video builds on the last. And the families who stick around tell me that this is the context they wish they'd found 10 years ago. So let me be clear about what I'm not saying. I'm not saying everyone needs to trade options. If you don't have the time, the temperament, the patience, or the interest, then don't do it. The IBC loop works with any income source. Your W-2 works, business revenue works, side income works, rental income works. Options just happens to be the accelerant I chose because I understand probability. I manage the risk. I have the background to run the numbers. And I like it. The principle, though, is what really matters. Earn dollars intentionally, warehouse them in a system you control, and deploy them on your terms. So whether you use options, a business, real estate income, or just simply your salary, the architecture is exactly the same. The policy is just the foundation. Income source is the jet fuel. You pick the fuel that fits your life. Here's what I want you to walk away with today. Most people are stuck in one of two camps. Camp one says save everything, don't take risks, wait 30 years, and hope it works out. Camp two says trade aggressively, YOLO, try to hit it big. Both camps lose, man, just on different timelines. The families who actually build generational wealth are doing something totally different. They have a system. Dollars come in, dollars get warehoused safely, dollars to get deployed strategically. Dollars recycle. It's not sexy. It's not a TikTok trend, but it's how wealth has been built for hundreds of years by families who understood the rules of the game. And you're not late. You're 35, 40, 45, 50, it doesn't matter. You've got decades of earning power in front of you. The question is whether those decades are going to work for you or just pass by while the system quietly takes its cut. I chose to stop being a passenger. And that decision, for me and my family, changed everything. Now, if you're sitting here today thinking, okay, I get the loop, I get why options matter, but is infinite banking actually legit? Show me the math. That's exactly what I'll be covering in future videos. I'll walk through real policy numbers, real illustrations, and I'll address the biggest objections head on. The idea that whole life insurance is a scam or a terrible place to park your capital. When you watch them, you'll see exactly why those objections just don't hold up once you understand what the policy is actually designed to do. I'll see you there. And if you're already past the research stage, if you're thinking, I want to see if this fits my situation, book a call with us. Calendar link is in the description. And finally, if you're curious about how I trade options, I'm a member of an education company that teaches an extremely effective framework. It's designed by the great Troy Broussard. Check out their sales page at remnantfinance.com/options. Also linked in the description below.